in this
Mhm.
just given I invested in Onflow, and
Mhm.
so I have a very, very good sense of the multiples, the revenue
Mhm.
range that people are at when they raise, and I can say this: Aunt Flo raised her seed round. So the thing that makes Aunt Flo attractive
Mhm.
is the enterprise angle,
Yes. Yes. Yes.
where it's like B to B to C,
Yeah.
and
Mhm.
and that bolsters your valuation a little bit because you have year-long contracts, they're enterprise contracts, and then, you put the work into selling into one, and then you can disseminate to many.
Mhm.
Um,
Mhm.
I can be transparent and share that, there's been adoption issues, meaning, corporates will, deploy this, but they're not getting a big kind of use through rate,
Mhm.
right? So,
Mhm.
so like
Mhm.
it's been hard for they're buying, but then they're not seeing the tampons really get used a whole lot, and so,
Mhm.
um, as a result, some of those contracts kind of don't get renewed. Um,
Mhm.
Claire Claire Coder is a beast at enterprise sales.
Mhm.
She's young and she's relatively inexperienced, but just through her she's like overly energetic. She's, a little nuts in that regard, but
Mhm.
um, she she that's what she's good at. Okay,
Mhm.
and I've learned that a lot of VC, a lot of what venture capital is
Mhm.
about figuring out what you're good at and then just sticking to your fucking guns,
Mhm.
because a
Mhm.
lot of VCs have a lot of bullshit to say. Oh, well, you
Correct.
don't know if you're a subscription. Well, we don't know if you're a subscription. And then you prove out that there's something else in this. So, well, we don't know if you're this.
Correct.
And really what it is spineless, no balls on behalf of VCs whom shy away from investing in founders that don't have Ivy League backgrounds. And
Correct.
that is a lot. I'm just naming, I'm just putting a finger on it, and I'm just gonna say what, you know, I observed, because, I don't come from that background.
Mhm.
And my partners did, they went through Harvard and Ivy League and all this other bullshit. And I realized that the diversity focused funds, they were really only investing in founders of color, black founders and Latino
Mhm.
founders that like were most similar to white folks in terms of like
Right.
how they
Right.
presented them. They're just like the cookie cutter black person,
Mhm.
like, oh,
Mhm.
well, they're
Mhm.
black, so therefore we're meeting our investment criteria. But, they went to private school, went to Wharton, and then did
Right. Right.
HBS, and then worked at,
Mhm.
Goldman Sachs, and it's like, "Oh my god, that is
Right.
not why I got into this." Like, diversity really just means investing in black people whom are least likely to rub white people the wrong way,
Correct.
and
Absolutely.
I fucking hate it. I hate it because, I would see a number of founders such as yourself whom clearly have it, clearly have
Mhm.
product, clearly have sales, and, we would be met with, well, they're untraditional,
Yes.
they're
Yes.
atypical, and it's like, all these words, and I remember I got pissed off one day and I was like, What do you mean by that? What the fuck does that
Right.
mean?"
Right.
Like, just say what you're trying to say. Just say it. Just say that this person doesn't have the 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 what would normally be considered the credentials to be, successful in the corporate world. And that's the
Yeah.
thing that has me bugged out anyway, is that a lot
Mhm.
of the things that they're looking for are, things that lend to success in the corporate realm, but not
Mhm.
necessarily the startup realm.
Mhm.
So
Yeah.
I think it's
One
flawed to begin with. Go ahead.
One of the things that I know that, I'm a woman. I'm head down in my business constantly. I'm not
Mhm,
huge in the networking side.
mhm,
I don't rub heads with a lot of, investors. I'm not too much in those environments. My
mhm,
my glory. I love waking up and doing what I do every day. I love creating those products. I love speaking to the women. All of those things.
mhm,
And my goal is to try to find the right connections and the right firms
mhm.
that do not have those bullet points that they need to check off before they invest. And so
Right.
that's kind of what I was hoping, like, from this call. Is there anybody, any connection, or anyone that you could send me in their direction that, I can kind of get an actual conversation with.
Yep, yep, I understand. So yeah, before we get there, so let me share some things that I saw that work really well in venture,
Okay, go ahead.
um, when raising funds in venture. And I realized that running a business is a totally different skill set than raising capital.
Yes. And
And
I will admit that I'm flawed in that side, that raising
mhm,
capital,
mhm,
more so because
mhm.
it's so, you know,
I
you got to
understand.
get naked basically,
I understand.
and people just judging you and all of those things.
I
So
got
yeah,
you.
I absolutely know that. Yes,
Yep,
that is
yep.
not my high point.
And I know that you've come across that. And the reason I mention it is very practical, right? So
Mhm.
in venture, as you know, we're buying a minority stake. You sell
Mhm.
20% of your company in a round, and the lead investor will usually take, I don't know, 10% of the round, or
Mhm.
50, sorry, 50% of the round, which is 10%. If you're selling 20% and someone takes
Yeah.
50% of that
Mhm.
round, so they're buying
Mhm.
10% of the company. So then
Yep.
that means that means that founder, even after getting a lead, you still have to go and secure, smaller checks from other people, right?
Yes.
So
Mhm.
unlike in private equity where, they buy the majority of the business and that founder doesn't have to fundraise, the fundraising skill, this trust me, this blew my mind. But the actual art and skill of raising money in a lot of times, in a lot of the cases, what is placed on a slightly higher pedestal than actually running the business.
Correct.
With
Correct.
you, I'm not worried at all about running the business. Maybe
Mhm.
the margins can be improved and blah, blah, blah. But actually, you might find comfort in knowing that, OnFlow raised their seed round on 250K of revenue, and, they're gearing up for their Series A around the $1 million revenue mark. So you're
Mhm. Mhm.
already way, like, in terms of like the actual fundamentals of the business, you are there.
Yeah.
So there's gonna be little to no need. We're always gonna be improving the business, but as far as
Mhm.
like, do not believe any investor that tells you, well, and then they place some artificial like milestone that you got to hit.
Right.
Trust me, right? As a VC general partner and also someone who is invested in this exact category, and I know
Correct.
the exact comps, there is
Mhm.
no more hurdles that you have to hit on the business side. What you do
Thank
have
you.
to do, though, is you have to bolster your fundraising ability.
Yeah.
Okay. And a lot of that comes down to not only what's said, but how it's said, right?
Yeah.
And you'll
Yeah.
start to learn that there's like little buzzwords that, gets investors like being like, okay, this founder knows how to raise money. And it's partially shitty because, a lot of it is judging, but
Mhm.
as well, though, that there is an element that makes sense though, because your ability to go out there and grow the type of business that's going to yield a return for a
Mhm.
venture capitalist is going to be contingent upon your ability to raise more capital.
Correct.
So something that investors are always looking at, and it's
Mhm.
actually a box that we check, is like
Mhm.
our confidence in this founder's ability to
Mhm.
raise what we call downstream capital,
Yeah.
which
Yeah.
which means you're gonna be able to not only just convince the investors at the A level, but when it gets harder at the B level, you'll be able to talk at the B level and also at the C
Mhm.
level, right?
Mhm. Mhm.
So things like so it's just a matter of like a lot of it is just lingo, honestly. Like things like
Correct. Yes.
downstream capital. You'll get people going, things like, hey, look, I know that businesses in this industry are being acquired at this multiple,
Mhm.
and the average revenue that a business has when they're acquired in this industry is this. So all we
Mhm.
have to do as Femi Secrets is go from $1 million to 10 million in revenue, and once we're at 10 million in revenue, we're gonna get a five to let's call it a 3 to 5x valuation on a three to x valuation on the revenue,
Mhm.
right? So like if you're at 10 million, you'll be valued at, call it 50 million if you get a
Yeah.
5x multiple, right? So a lot of it is actually backing into the math that VCs think about, because
Mhm.
here's what
Mhm.
we think about. We think about, okay, if we invest in you at the Series A level and we're acquiring whatever percentage of ownership.
Mhm.
You then look at, okay, businesses in this industry are being acquired at this price point. And when they
Mhm.
get acquired at this price point, they usually have about this revenue, this much revenue.
Mhm.
So then the VC is making sure that the business and the ship and the jockey that they're betting on can go from where you're at now to where
Mhm.
businesses are
Mhm.
when they start
Mhm.
getting acquired in terms of a revenue
Mhm.
standpoint. Okay.
Yeah.
So then you then assume, okay, well, how many rounds of dilution am I going to have to go through to get there? Okay.
Mhm.
So if we invest at the A, you can assume, all right, let's say she's going to raise 2 additional rounds of capital.
Mhm.
Does Femi Secret's founder have the ability to A, be able to raise that downstream capital? And also B, do we think that she's well equipped to, really grow the business to that point? So
Mhm.
that's the logic. And I do want you to spend some time getting
Mhm.
familiar, more familiar,
Mhm.
very like ridiculously familiar with
Yes,
that kind of
absolutely.
lingo, and because you'll
Mhm.
you'll start to see that you'll start to break down those walls
Mhm.
just by the things that you say. For instance,
Yeah.
comfort is one of them. I don't know why, but all VCs fucking say it. They'll say, what's your comfort level on this when we speak internally?
Mhm.
I really want to get there, but I got to get comfortable on this, or I got to get
Mhm.
comfort,
Mhm.
comfort. You'll hear that all the
Mhm.
time. So you can
Mhm.
actually just share that. You just lead with it and be like, so, after you pitch and you say, look, so I've gotten other investors comfortable with this category,
Mhm.
by
Mhm.
so you throw in these words that they look for. I'm really confident in our ability to raise downstream capital. This industry's been
Mhm.
validated by, so on and so forth. Okay, so I did want to touch on that because again, growing the business is a crucial skill set, but equally, if not a little bit
Absolutely.
more important in VC is fundraising. So work on that. But then also now with respects to like who can you talk to? Well, um, there are a bunch of um all right. So there's going to be you're going to face a little bit of scrutiny because a you don't have any venture funds on your cap table that
Yeah. Yeah.
yet, right? And so in terms of the narrative on paper, you are it's perfect because you've raised $1 million, so you broke
Yep.
that threshold and blah blah blah, and you have the revenue. However, a lot of what VCs consider is who else is on the cap table. And
Yep.
so raising $1 million from a competition, your own money, and a few angels, you're gonna get some scrutiny. And
Mhm.
people are gonna be looking for, okay, you know what? Can she why wasn't she able to bring on a VC? Is it because she doesn't know how to raise money from VCs? This is what
Mhm.
people are gonna be thinking.
Mhm.
So
Mhm.
so then you start looking at, all right, well, whom are the VC funds
Mhm.
that could potentially lead around, right?
Mhm. Correct.
So there are some consumer focused funds that I think will be very good here.
Mhm.
One of them is called Randa, Randa. They're a consumer group. Another consumer group is Base 10, base, and then the number 10.
Mhm.
Um, Another angle that I would pursue personally, if I were you, is a lot of those women-focused funds. Um,
Mhm.
Female Founders Fund is elusive. No one will say anything to you, but they have a bigger brand than they do infrastructure.
Mhm.
So
Mhm.
they get so much inbound that they're actually not anywhere near well equipped enough to
Correct.
deal with
Correct.
it. So
Mhm.
people, we've heard it often where people are like, "Yo, I just can never get a hold of female
Correct.
founders fund."
Yeah.
So all they
Absolutely.
do actually is they follow. They just wait around until someone else has been validated, a woman-led company, and then they'll
Mhm.
put their money in. And so you'll
Mhm.
see a lot of VC money for as ballsy as they think they are. They're actually followers. So who is one of those women-led funds that lead? Well, what's their name? Shit, I'm forgetting. We led around with it. Oh, BBG, Built by Girls.
Okay.
BBG, they're a $50 million fund. They're very smart. They're a little bit more institutional. Okay.
Mhm.
So they
Mhm.
are a little bit more like, you know, academia, and they come from private equity. And so that
Yeah.
it,
Yeah.
that makes them good investors. but
Mhm.
that makes them a little bit more sensitive to investing in founders that they feel, um, like come from that, or at least can
Mhm.
hang like hold their own in that. So,
Mhm.
but
Mhm.
BBG is a good one. Another one is Clio Capital. Clio Capital is founded by a woman named Sarah Kernst or Kunst,
Mhm.
actually.
Mhm.
She's okay. I'm just gonna be honest with you. She's okay. Black woman. She's okay. She's not super sharp as an investor, in my
Mhm.
opinion. I
Mhm.
don't mean to be rude. I'm just in my opinion,
Absolutely.
she's not like a super sharp investor, but
Mhm.
she does have a great network, and she's been
Yes.
really good at getting other Black women kind of invested with her. She has a
Good.
much
Good.
smaller fund, okay?
Mhm.
So she's not unfortunately gonna be able to write a meaningful check for you.
Mhm.
But what you'll notice is it's actually gonna be about chipping away at the phrase, right? And,
Yeah.
like, if
Yeah.
you can get Clio Capital, she's got a $5 million fund, which,
Mhm.
which think about it, spread across, the 50 companies that you gotta invest in,
It's nothing. Yeah.
it's nothing, and then on top of that, you gotta allocate for follow-on, so it's actually, like, even less than, than the math
Right.
indicates.
Right.
So
Right.
she will write a 25K, 50K, let's say, but
And
those are
really
y
quick, what's
mhm,
your thoughts? Because I've turned down a ton of those checks
yep,
because I don't want to fill my cap sheet.
mhm,
So
mhm.
it's like, what are your thoughts on that? Should I be accepting those checks or?
It's a good question. I think you should be accepting them from the right people. From
Yeah.
people
Yeah.
from people where their 25K is obviously not gonna make a difference for you, but
Correct.
if it can help you signal, um, to someone else, then it's worth it because then you start building a little bit of a narrative, and that's a
Yeah.
lot of
Yeah.
what a fundraising, around is. For instance, I don't know if you've technically opened your round yet, but if you haven't, I do not want you to anywhere near open it just yet, okay?
Okay.
Because of what I want you to do, what happens is if you go to market right now and you open your round with almost no leads, then your
Mhm.
round is gonna be open for quite a while, okay?
Okay.
And then what happens is people are gonna say, "Oh, okay, well, oh, how long has the round been open? Well, how much you have, raised?
Mhm.
Less than 50%." Anytime you're like less than 50% raised, people are like, there's got to be a reason this is open, and then they don't have any incentive to put money in because no one wants to put money in and then just sit there and
Right.
the round's gonna
For
be open and never close. So it actually what founders do is you keep your round closed and you do like you soft circle is what they call it, right?
mhm. Yeah. Yeah.
So then you start hitting people up. Hey, my round's not open just yet, but I'm just gauging interest, and you start gauging
Mhm.
it, and you start getting these soft commitments. And by the time so it's actually a lie in a way because
Correct.
you are like looking for the money. You're just saying that that round's not open yet, right?
Mhm.
And then so
Mhm.
you position it so that by the time you have enough interest from, let's say Clio Capital decides to put up, 50K, let's say,
Mhm.
Built by Girls, they have the capacity to lead, by the way, they do lead. So Built by Girls, they like to buy about 10% of the business, tell you now.
Okay.
So what valuation are you going to market with?
9 million.
That's reasonable. Um, so pre money or post money?
Free.
Okay. And you're raising $1 million. So 10 million. Perfect. Okay. Well,
No, we're raising 3.5.
oh, you're raising 3.5. Okay. So
Yeah.
12.
Uh-huh.
Well, okay, fine. So you might be able to get away with 12. You might get beat up and come down to 10, which by the way, it's 100% worth coming down on valuation if you have the right fund.
Okay. Okay.
Okay. So like if it's a Built by Girls, if it's a Harlem Capital, if it's like certain funds at base 10 is it's a tier
Mhm.
one VC and consumer. If you got certain funds that are like, hey, we're investing, but this is what it is, then you take the term sheet, you come down on the valuation.
Yeah.
But if it's not anyone super enticing, then you can be bold on it. But now here's what's going to happen. Built by Girls typically will want to, let's say, lead, but they usually won't want to lead until they see some commitments already, right?
Got you.
So
Okay.
that's when so people mistakenly think that leads because of the
Right.
name lead, you would think that
Right.
they're gonna kick off the round, but they
Mhm.
don't.
Mhm.
They
Right.
lead in the sense that they take up the biggest portion of the round,
Mhm.
and thus they're signaling to the market, hey, we're putting our money up in this founder. We believe in this shit.
Mhm.
And then it's
Mhm.
actually their job to help you fill out the round. Because if they're
Gotcha.
taking a really big position in you, then that means that, you know, that they need you to win because they need to return capital. So a lot of what you should be asking when people are interested in leading, when you get there, you'll say, well, hey, you know, listen, I really appreciate, your interest in leading. What kinds of value do you offer for companies, that you lead rounds in? And what are some companies in the past that you've led rounds on? And you should also speak to those founders, to be honest.
Yeah.
Like it's actually a two-way street, and not enough founders treat it like that. So anyway, let's get to it. So you have to build this narrative of Sarah Kunst invested 50K through Clio Capital. You
Mhm.
got a couple of angels, by the way. I love
Mhm.
angels invest. I know you had some family and friends, but
Mhm.
who's our great angels are founders in this category that have been very successful. For instance,
Mhm.
like Birchbox, like the founders
Mhm.
of Birchbox. If you can get to them, if you can get like so if you can get to a few high profile entrepreneurs that have been there, done that,
Mhm.
them investing in you, massive. It
Yes.
doesn't matter if it's 10K or 25K. You just want them on your in the beginning of this round, soft circled. So now let's play that out a little bit. Let's say you have
Mhm.
just for argument's sake, let's say you have little the Clio Capitals of the world. Let's Backstage Capital, by the way, Arlen
Mhm.
Hamilton. I'm sure you've heard of her.
Mhm.
She's another one that, she has had a hard time raising money.
Mhm.
Um, and so she has a much bigger brand than she does fund.
Uh-huh.
And she is gonna be able to put money up, but it's gonna be much smaller. And I think
Right.
people are disillusioned sometimes because she's awesome. I think she's
Mhm.
really great. But the brand has vastly exceeded her investment infrastructure. So if you get a Backstage, so now you have Backstage Capital, you have Clio Capital, you got a couple of angels, and you get to the point where you have about 250K raised,
Mhm.
right? Then you're at the point where it starts making sense
Mhm.
for leads to put money up, because
Gotcha.
if you're raising 3.5, right?
Mhm.
They're gonna take like a good chunk of that. They're probably gonna write,
What are your thoughts on that raise amount?
I think it's high.
Yeah. Yeah.
Yeah, I think it's a little high. I think um, because also if you're raising at a $12 million valuation, you're giving away 30% of your company.
30%. Yeah.
It's too much.
Yeah.
And it's
But
gonna
can I even call the 2 million raise a Series A?
Mhm.
Yeah.
Yeah. Yeah, 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 for sure. You can do 2.5. I think that's a sweet spot. I think you should target just generally giving away about 20%,
Okay.
because then a
20%.
VC, like good VCs won't let you give away that much, because then the founder doesn't have enough equity, and then they're concerned about them sticking around for the long term.
And
So,
then last question,
mhm,
because you're into OnFlow, do what multiples do they use?
let me find out. I have some of the models.
Okay.
Let me see some. We've done a lot of work with them.
Right. And
Um,
have any of those companies been acquired in the femtech sector?
um,
I
hmm,
don't think so.
let me see something. Okay. So it looks like, yeah. Let me get I know we've done some valuation modeling. We've done a lot for Outflow because
Mhm.
we
Mhm.
led that round, and we have a board
Mhm.
seat. So
Mhm.
that's one that we have a big position in. But since I'm no longer at the firm,
Mhm.
it's something that I can be a little bit more transparent about than I would otherwise been able to.
Mhm.
So let me try and get you that. I might not have it, but I might.
Mhm.
Um,
Mhm.
but and with respect to if they're getting acquired, again, let me see, because what we ended up doing is, if you have no comparables, if you have no comps to model after,
Mhm.
you can look in the public markets for businesses in a similar category, like
Mhm.
the Procter and Gambles of the world,
Mhm.
and right, and you can figure out what multiples they trade at, and
Mhm.
then what you do, it's a lot of manual work. That's why it's really
Yeah,
helpful if
yeah.
someone could just give it to you. But then what you do is you then look for all the femtech companies that have been raising, and
Mhm.
you can usually, kind of back into the valuation because
Yeah, yeah.
if they raise 20 million bucks, you can usually deduce that they're giving away 20%, so you can back into the valuation.
Mhm.
So that will give you a sense for it. And so all those things that we talked about today, refining some of the VC lingo will be
Yep.
necessary to raise the A for
Yep.
sure.
Yep.
Um, getting some of the don't open the round yet.
Mhm.
Get the interest first from the few angels, a few, a few, of the smaller funds like Backstage. She's in
Mhm.
every deal, so it means
Mhm.
less in terms of signaling, but it's
Mhm.
still good to have because you want those Clio Capitals, the Backstage, um, who else? Cross Culture, those kinds of funds, and then it starts building this narrative because then if you're raising $2 million bucks or 2.5, the lead's gonna take. If you raise 2 million, the lead's gonna take 1 million. So if
Yeah,
you if
yeah.
you have 250 to 350 kind of soft circled,
Mhm.
then once you kinda have the lead, then you, like, technically, let's say you open the round, boom, then together with the lead and with this soft circle of interest that you have, you're already at, like, 1.5 million, and if you're
Right.
raising 2 million, most of the round is filled up, right?
So
So
two
it's
am I raising 2 million or 2.5?
well, it depends on the valuation. It's
Got you,
gonna be
got
it's
you.
gonna be 20% of whatever your valuation is.
And here's the other thing. So I have like, Atlanta, not VC firms, but firms that are put together that can
Mhm.
put in 250,000, 300,000. But
Yep.
does that matter like when it relates to, then going to a VC? Because I
Um,
have one VC in New York that was
understood.
able to fill the round, but they're like, we need a sophisticated lead.
Correct, and you will hear that a lot.
Correct.
The angel group from Atlanta won't be helpful for indicating,
Yep.
like, institutional interest, but they will be helpful
Yeah.
to fill the round up.
Yeah. Yeah. Yeah.
So,
Yeah.
like, yeah, I'll take it all day. Angel groups like New York Angels or, I would be tapping all the women-based groups that there are,
Okay.
all of them. And once you can get one, they usually know each other. So then when you're in diligence with one, then, they'll call the other and be like, "Hey, what do you think?" And then their comfort level will get there. And then you can fill the round with half of it diversity focused and half of it consumer focused
Yep.
and a few angels from the business, and that's in a very attractive round. So
Yay.
so your biggest hurdle will be securing the lead, and
Mhm.
remember, the lead will follow after a good narrative of an existing investor base. So just focus on getting the first few folks in there that really help shape the narrative. You're optimizing for narrative over dollars with the first few investors,
Mhm.
and then you start having those conversations. And also, another very helpful thing is that investors that lead rounds, when you know how it is, like when a company raises their round, they
Mhm.
take the tech crunch immediately.
Mhm.
They'll almost always say led by whomever.
Yes.
So
Yes.
so you will be able to get a feel pretty quick by just doing a little bit of research. Oh
Mhm.
shit, I'm way over. Um,
Yeah. Yeah.
whom who leads and who doesn't. Okay. So
Appreciation.
best of luck to you. That my
This
email is
has
always
been really good. I
yeah,
appreciate it. This is
I'm
great what
glad.
you're doing.
I'm
Thank
glad.
you so much.
And my email is always open to you. So just shoot me a note and just keep me in the loop as you go on and ping me for the aunt flow model. I'll try and find it. If I find it, I'll just strip out anything that's sensitive and
Yeah.
I'll
Yeah.
send it your way. Okay.
Appreciate you so much. Have a good day.
See ya.
Thank you.